You wanna grow and go and get there. Sometimes upward, sometimes nowhere. You've got the ideas, you're looking up at the clouds. But how do you start standing out of the crowd? So build it with us from the ground up.
Hey everyone, welcome to From the Ground Up. I'm Zach Conway. I'm here with my co-host, Kelsey McKenna. What's up, Kelsey?
Hey, what's up?
How we doing?
Great. I'm pumped up right now. I think I had too much coffee. So excited to be here.
Yeah. It helps. What are we, I think we're talking about basically an extension of previous conversations around trying to deliver more value as an advisor and really kind of define differentiation, but understanding where that starts in your process. So I think you have a question for us to kind of tee us up today.
Yeah. So the topic that we're going to talk about, the question we're going to try to answer is, what does your client or your prospect really care about and want when it comes to investing with an advisor? And how do you deliver that? So a starting conversation on how to deliver that, I should say.
Yeah, and we have a stat. We like kind of kicking things off with a stat that speaks to the question. So a Cerulli study recently came up with this number. So 90% of affluent investors didn't even consider their parents' financial advisor as they were seeking to hire an advisor. So 90% of those people said, what I've seen and experienced with my parents' advisor, not interested. I'm going to go a different direction.
Right.
And I think one of the sort of learnings in the study that speaks to the question you're posing is that they had no expectation of feeling heard and understood in working with that advisor. They kind of feared that they'd sort of be like a line item in an Excel spreadsheet and just sort of processed through that process that they've witnessed, you know, their parents' experience, and they wouldn't be their own selves, right? They wouldn't be seen as their own entity that has their own perspective and goals and everything else. So that's a pretty amazing kind of terrifying thing to think about, right? As we talk a lot about this, organic growth for firms is that, you know, we talk about it as this big buzzword and how do we create organic growth? And the shortest, easiest answer to that is you need to be engaging younger clients. You need to talk to young prospects. And so if 90% of them don't want to talk to you, what is that about? And trying to break that down, you know, from the advisor's process perspective. What's going on in our businesses where we're conveying that out to the world that it's, you know, we're just not going to understand who the heck you are. And to your question, what do you really care about, you know, as it relates to investing and planning more broadly as well? So, yeah, where do we go from here? It's kind of a daunting, bummer statistic to think about.
It's such a big problem. Like the stat itself is such a big problem. So I know we're going to really focus in on like the investing experience a little bit today. But to your point, there's a lot more to this than just what you're doing when it comes to investing. But I think for the purposes of this conversation, wanting to focus a little bit on the investing experience arc. So like from the moment that the client is in the room, how are we delivering what they really want and what they care about? So I think that's where we should take it. And we're probably going to build on the answer to this problem through future episodes. But for now, maybe focusing on the beginning of that experience, which is usually those first touches that an advisor has with a potential client, whether that's a next gen, like a second generation of a current client or a referral or someone who comes in who saw your website, saw your marketing material, whoever it is.
Right. So why do these people not feel heard and understood specifically as investors? Right. So to your point, we can kind of broaden the scope in future conversations to really unpack it even more of why they don't feel heard and understood in general in a variety of ways. But specifically as they think about how this human person is going to help them manage money and invest in a portfolio, why do they have this expectation that they're not going to be heard and understood? So each moment of those, each moment between the advisor and that person when they walk in the door, what's kind of going wrong today. And you think of the typical process is some form of an intro meeting, right? You're engaging this person for the first time. Maybe they've been referred to you. Maybe they found you, through a website, probably not through their parents. And you're having an initial conversation that in theory leads to what we would call a discovery or assessment meeting, and then ultimately some form of a proposal. So broad proposal around planning, but with investing specifically, how are you suggesting to this person that you're going to manage, how you're going to manage their money, and then implementation, and then hopefully a lifetime of a relationship with that advisor moving forward. So I guess, what are your thoughts of like where that breaks down? I guess we can kind of start like, is that the right overarching process? Are those the right steps? Are there any steps missing? And then we can kind of dig into like each of those meetings. What is going wrong where we're not making these people feel heard and understood?
Yeah. I mean, I will say, just to start off, I think a lot of firms, there's two things that I see, at least with firms I've worked with more. I've seen like a lack of process overall, like a lack of experience design is what I'll say. So they have a process, but they haven't really thought through the client side of that process. And what does that experience feel like? What expectations are they setting explicitly, but also just with how they interact at these different touch points. So there's that piece. And then I also think I see firms who not only have they not thought about the experience, but they just lack like momentum building in this process as well that kind of keeps it moving. And I think that's also something we should probably touch on a little bit as we go through this, because it's not enough to just like really think through the experience. It's also about the process that supports the experience. So I don't know if that made sense, but a lot of firms are leading with process and they're thinking through everything in terms of what they need to follow, what they want to do when it comes to investing. And so they're not asking questions that make the client feel understood. They're not taking the answers to that question and building upon that like shared mutual understanding throughout the rest of the journey toward becoming a client. But then there's also just firms who really just haven't thought through how to keep somebody moving through that process and that experience.
Yeah. There's like broad stroke issues of, I think a lot of firms, to your point, think they have a established process, but what they have is just a sequence of events.
Yeah,
right?
with data
they just
points.
know, like I said, yeah. So you're going to have an intro meeting, you're going to have a discovery meeting, you're going to do a proposal, and then hopefully you're going to onboard these people. But what exactly needs to happen? What are the details and the tactics, right?
Yeah.
So to your point, tactics around momentum building. We joke about like there's so many simple things that we kind of forget to do, even in our own business, of when you have an intro meeting and you're creating some, understanding that you mutually want to move the ball forward, then book the next meeting at the end of the intro meeting.
And explain
right?
what
Don't
it
leave
is.
people-
Yeah, like set the expectation, book the meeting, do all of those things to kind of continue to build value and momentum as you move on.
That's right. And then, it's like the expectation setting aspect is also very often missed, where in an intro discussion, we often as advisors frame it as a sales discussion, right? So we talk a lot about this. There's so much just talking at people in first engagement around what we do and why we're so good at what we do and how we think about investment portfolios and how to manage money and credentials and who's on the team and blah, blah, blah. Here's like 30 slides.
Yeah.
And the client's like, I booked this meeting with you because I have an actual problem I'm trying to solve.
Yeah.
And by the way, like somebody we mutually know referred us. Like, I don't need your hour-and-a-half sales pitch.
Yeah. That's such
what
a good
I
point.
want is, it's so this, and again, like it's also, it's just a psychological thing. We feel compelled. It's like an easier emotional thing for us to sell than to accept the fact that these people are actually seeking our help, which is bizarre, right? But when you do that, there's no expectation then of what the process is going to be moving forward. So you can be on the same page about, what's coming next.
Yeah. So one distinction, just based on what you just said, is it's such a good point. When I'm saying like designing the experience and being clear and setting expectations is not the experience. And I think a lot of times, like, people think, oh, I'm going to bring them in and tell them, this is my whole process. This is why I will help you win, or I will help you get what you want. But they skip over the listening part. Like, all of that expectation setting, that should be very short and sweet in terms of what is explicitly stated in the meeting. And it's more about everything else you're communicating. So I'm communicating in this meeting that I will continue to listen to you throughout this relationship, and I will know you deeply in this area so I can best serve you. And I'm doing that not by saying I'm going to do it. I'm doing it by actually doing it right now. So when I'm saying like expectation setting, I don't mean like bring them in and be like, here is our exact experience and process that you will receive if you work with me. I more so mean like, you have to know that, you have to have that, but then you're designing the experience so that you're truly delivering that the whole time. You're delivering on that expectation from the moment they step in your door, or even before that with your email invitation. Everything that you're doing is delivering upon that promise. And these are just a few different touch points where you can deliver that, and where you can really set those expectations through how you act, what you ask, why you ask it, and what explicit expectations you're setting.
It's a really good distinction, right? Like, it is, when we think of expectation setting, you think of like putting the slide on the screen of, here's what's going to happen next. We're going to gather your, and it's on every advisor's homepage of like, here's our process. Boom, exactly. Boom, 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 boom. The most important expectation you're setting, to your point, is that you're a good listener, basically, that you're actually understanding why they've come to the table to engage you in the first place. So yeah, process is like 30 seconds of here's what's going to come next, and then maybe you bookend it at the end of the discovery meeting. But other than that, it's setting expectations on what your differentiation is, the value you're delivering, without selling and explaining the value. The value you're delivering is simply asking the right questions and listening to the answers.
You're delivering it as at every touch point.
Exactly. Yeah. Don't explain it, just do it. So that's a great distinction. So,
and then all that process stuff, though, just to add to what you just said, all that process, that little like visual you probably have on the website, you have it in a deck, that then becomes contextualized by what you've learned. So I also see that as well, where you're asking the right questions, you're listening, or an advisor's listening. And you see this in tech. This isn't specific to just like advisors either. This is across, many sales prospect to client journeys, but you're doing that, but then you're not applying those learnings immediately in terms of how you explain your process. So when you're then explaining that diagram or whatever it is, your process slide, you're then using what you just learned to kind of paint more context, or to build more context around, here's why we have this process and how you specifically would get value out of working with us. It's not just like bookending it with the picture or the visual,
No, that's it. It's like you are conveying to this person, and it is creating the momentum in the relationship of every data point you're actually absorbing through each step is then shaping the next step, right? To really be specific here and to tie it back to investing stuff specifically, in an intro meeting, you're starting to get a flavor for how this person thinks about what investing is as a mechanism, what's interesting to them about investing, how they think about capital markets, do they care, are they really analytical, all the things that are in people's heads about what that means. You're absorbing that information. It should then inform what's going on in the discovery meeting, along with all the other sort of qualitative intel you're hopefully absorbing in that intro discussion. You're then certainly not asking questions you already have the answers to be super specific, but you're then asking follow-up questions in a hopefully more nuanced way, because you now are starting to build this three-dimensional view of who this person is, why they're at the table with you. So the discovery meeting is going to be shaped differently. Ultimately, how you're talking about moving forward with a proposal is going to be clearly shaped around that deep understanding, or hopefully it is. And then every aspect of planning, but specifically portfolios, is going to be shaped around that understanding. Everything's evolving as you go. And then, of course, as life changes, everything else post implementation with somebody, you're evolving, everything's adapting, you're absorbing new information. So yeah, I think that's so critical, because otherwise people feel like, we always use this analogy, people, the experience to them is like being on an assembly line.
Mm-hmm.
So on one hand, it's super important to show these are the steps, but it very quickly can feel like, oh, this is like you're just, one after the
Shuffling
other
me.
assembly line.
Yeah.
Yeah, pushing you through the system. And so the more, again, you adapt that experience throughout before you get to onboarding, that's, I think, pretty critical.
Yeah. And it is figuring out, like, you're both evaluating each other. So, like, being in a position to know who is, and this is a whole separate topic, but who is that target demographic, who is your ideal client, and what are the different flavors of that ideal client, so that it can be customized, but you're not going completely out of bounds for every single customer that comes in your door. You should have a good sense of what you can offer so that it can be personalized and it can be meaningful, but the process still applies. The experience is still positive as you make tweaks and adjustments as you go through. I always talk about, like, sales being a service, and I think a lot of people think of sales as like, this like gross, like the car salesman version of sales. So I think that, like,
Right.
for a lot of these, at least for me, when I'm going through and working with any company, like, I see that sales process as a service that company is providing, of giving me a chance to evaluate and get a good sense of what I'm buying here. And so I think just thinking of it that way and designing an experience that is truly about jointly evaluating each other and getting to know each other in a very human way, while keeping it on the rails, making it scalable, making sure you get the data that you need to then deliver on that as when they're a customer. Like, all of that is still important. It's just kind of reframing how you think about it and kind of where you create those human to human connections.
Yeah, and I want to, like, emphasize how important it is. It seems so simple and maybe not important, but how important it is in those very early moments to do it the right way, where, to your point, you're not doing whatever version of the car salesman's sales talk and doing the slides and just rambling and talking at people. And here's how we do it. And again, we have 100 years of expertise, blah, blah, blah. And just understand why they booked the meeting with you, and have that qualitative discussion about, like, they have enough context for, in general, what you do and what your value add is. You can layer in the abilities through the conversation as you go, but it's such a immediate, at the starting line, momentum killer. To have, because think about it, the momentum's already been created. There's a reason someone has booked a meeting to go sit down with you on a Zoom call or in person to have this dialogue. So killing that at the starting block with slides, they have that information, right? You have a freaking website, like, they've Googled you. They have a general understanding of what this is all about. So you spend a half an hour clicking through some pitch. And it's so, again, I think the weird part is, like, it can feel easier to advisors to do that, to just put up slides and, like, go through a presentation. And yet it's literally, like, the opposite of what that person is emotionally seeking.
Yeah. So what do
again,
they,
it's, like, so specific.
Yeah. Like, what do they want? They want to be known. They want to be understood. They want someone to listen to them. And not only that, but apply those learnings throughout the process, basically, and provide an experience that feels meaningful and connected, and like it is specifically for them and the issue or the problem that they're coming to the table with, basically.
So let's tie it back more tangibly to the investing experience, right? So to kind of hone in on those moments, and then what it creates, and how the person feels heard and understood, specifically as an investor. And so, again, intro meeting, same issue. You're conveying this story of how you manage money, right? This is our approach. This is how we think of, how to build portfolios, et cetera, et cetera. These are the products we use, whatever story you want to go tell that they don't really care about and isn't making them feel heard and understood. Then from there, when you then move past intro, hopefully if you get that far into a discovery meeting, on the investments front, how are advisors today actually understanding who an investor is, right? What questions are being asked of them about that? And well, I guess I'll let you answer that question. What are we actually asking and understanding today?
Yeah. I mean, I think most advisors are trying to get a sense of risk. I think that's the most common, whether that's actually getting like a risk number of some sort or doing some sort of formal evaluation of risk, or just trying to get a sense of it through conversation. I think that's the most common risk. And then obviously all the financial information, like, where are your investments today? How much money do you have in your portfolio? All of that, those financial metrics. But I would say that's the most common, is just when it comes to investing specifically, I see it really tied to risk, that being the one-dimensional assessment that we're doing here. And then everything else is really more planning related, data gathering.
Right. And I always, so we know why we need to do that, right? It's literally, as a fiduciary, we do need to understand how people emotionally can withstand taking risk in capital markets and how to then ultimately try to build an asset allocation.
It's important.
It's important, right? But it is, as you said, sort of a one-dimensional understanding that, ironically, again, we need to gather it somehow, but it's such an stress-inducing way of assessing how somebody thinks about investing, right? It's effectively asking people, as you're getting to know them, how much money are you willing to lose in the markets, so that we can figure out how to invest your portfolio. Again, not an unimportant variable. We need to know it.
Yeah.
But if that's how you're framing your overarching understanding of them as an investor, they're not feeling heard and understood. They're feeling sort of terrified, right? That you're just sort of teeing them up for thinking of the negative when they hand their money to you to invest. And then on the other side, the story of what their portfolio is going to be when you get into that proposal moment is then, if you're connecting the dots from risk tolerance to here's your portfolio, that's how you're framing the portfolio. It's simply, this is this thing that's in line with that risk metric we gathered. That's all you know.
Yeah.
And maybe you're tying it back then to your initial sort of investment story pitch of, we've selected these managers, or we're tilting this way, or, here's how we'll tactically do whatever in the future. Whatever your sort of like investing story is, you're sort of, plugging that back in the proposal moment. But all it's ultimately anchored on in terms of who they are and all that they've expressed to you about them, about what investing even means, is their ability to emotionally withstand losing money.
Right.
That's it. And so we can talk about what that then sets you up for in the future when you have continual conversations about investing and what's going on in the portfolio. But again, you can think about like this debt you're building for yourself over time as the advisor, and setting those value delivery expectations to the client through those steps.
Yeah. I want to bring up something that I talk about when it comes to like success so my background obviously is creating experiences and driving success using tech products, right? And something I spend a lot of time thinking about is feelings of gain and feelings of loss. So whenever you're doing what you're saying, like a withdrawal, you're withdrawing, you're creating a feeling of loss or like a negative feeling of any kind. That should be balanced by a feeling of gain, or hopefully outweighed by a feeling of gain. Throughout the entire relationship, the whole goal is to minimize feelings of loss and to maximize feelings of gain. Whether that's gain of money, time, comfort, peace of mind, those are feelings of gain. Feelings of loss are stress, I'm wasting money, I'm wasting time, I'm losing, it's very obvious. I'm not going to go into detail here, but when you're talking about just risk and creating that like stress feeling, it also can create a feeling of, okay, this person is doing what they need. They're getting from me what they need so that they can check their box and they can do their job. But you're not, if you're only asking those questions, if that's it, that's the extent of it, you're not balancing that out with feelings of like an increased understanding of things that matter to them, or an increased understanding of how you're going to then deliver value over time, other than these financial metrics that are really, it's why they're coming to you in the first place. Like it's not, most clients are not sitting around thinking and wondering, what's my risk number? What's my risk tolerance? How much risk can I withstand? Like that's not what they're thinking about. They're thinking about their life, their values, their needs, their financial goals. How are they going to get there? And they're hoping that you can help them with that. So I think it's an easy way as you're going through all these points in the experience, just to try to reorient around what is the client experiencing. And when we open it up to other dimensions of understanding, then you can kind of have those feelings of gain come back, because they're feeling more engaged. They're feeling like they're giving you something and spending time with you to create that meaningful relationship down the line with their investment portfolio.
That's it. Like, why are we asking the questions we're asking?
Mm-hmm.
Is it really ultimately making that person feel understood in a way that's going to have them want to hire you? That these statistics are suggesting otherwise. And so what are those things that we should be asking, right? We kind of, what's interesting too, is that I think advisors know that we need to go beyond the balance sheet when it comes to broad financial planning. We do understand why, we get into these more qualitative, deeper, more meaningful discussions about hopes, dreams, aspirations, what's keeping you up at night, what are your values, all these things that money weaves through. And good advisors are capturing that information. And then again, it's informing not just the guts of the actual sort of financial planning tactics, but how you talk about those things that you're doing and why and what it means to the family long term. And so it is a disconnect very often that we're not doing that when it comes to investing, right? So it is a pretty bizarre dichotomy of like, we do intuitively know to go deeper in discovery meetings around everything else, right? Like we've talked about before in our business, in the wealth business, we get everything, right?
Yeah.
Everything from, how you feel about the quality of your relationships with your family and your satisfaction with your health and where you live. You spent lots of money on your new house. Do you actually like where you live? Are you spending enough time with your family? All these different important parts of life so that we can shape conversations and the financial plan. So like, why am I then just asking you what your risk tolerance is and how I'm going to think about investing your money and talk to you about how I'm investing your money?
Yeah.
So I guess the question is like, so we intuitively know it as advisors, but then what are the questions, right? Like, what could we be understanding better about how people think about investing specifically to try to make them feel heard?
Mm-hmm. Yeah. And I think maybe you could open up some of the questions that have been really helpful to you in understanding end investors more deeply than just looking at risk. But just to reiterate what you said and be super clear, like, and let advisors off the hook. Advisors do this relationship building on the planning side, is what you're saying. Like, a lot of advisors are amazing at this. And to be totally fair, it would be a waste to ask these deeper questions if you can't deliver a solution that meets the expectations that you're setting by asking the question. So like, I think we should turn to which questions to ask, but I just want to make that clear is like, I think historically, like when I think of advisors who have been doing this for a long time, if you didn't have a way to deliver on asking these deeper questions about investing, it wouldn't make sense to ask them, because then what, so.
Yeah, exactly. So you need to be able to connect the dots, right? If you have the wake up call moment that, why shouldn't I or couldn't I know this person as an investor more deeply, then okay, but then what's the output? What does that mean in my business? What's the sort of support model for that as I engage the client moving forward? What does it mean in terms of what's in the actual portfolio and how we manage the portfolio? All those different machinations you can't take that leap of faith until you know what's on the other side.
Yeah.
And so the things that, it's interesting. Like I always talk about in the business, the things you realize about the investor mentality too late in the game, right? It's like
Yeah.
the
Those
things
are
that
hints.
pop up.
Yeah.
Yeah. So in terms of like a very specific sort of actionable thing to start to think about this as advisors, like what are those moments you have like 6 months into a relationship with a new client where they ask a question about the portfolio where it's like, wait, what? Like, what are you, why are you asking me that? Well, where is that coming from? Because then that's the question you didn't ask.
Yeah.
That's the nuanced thing in their head about what investing means that wouldn't have it been awesome to just know that about that person ahead of time, again, in that expectation setting stuff way back at the beginning. So what are those things? It's what does investing actually mean to this person as a mechanical, technical process? How do they think about it? Right. I think there is this sort of weird thing where people, in part because of because of our industry, forget what the process is, right? When a financial advisor takes your money and puts it into a portfolio, you own things in that portfolio. Those are companies, out in the world doing things. They're going to grow or not grow. You're involved in this economic construct that some people are really super interested in and want to understand and see and feel and talk about. Some people not so much.
Yeah.
But in general, as a process, what does it even mean to them? Is it interesting to them? How do they want to talk about it? On the sort of other behavioral components, a major, major, major part that was a wake-up call for us in our own business as it relates to owning companies. Do you care where your hard-earned dollars are actually going and what you're empowering? So that's the other part of the sort of paradox that we haven't really dug into with clients. And obviously, this 90% stat, I think this is a huge, huge lack of focus that if we don't address as advisors, we're never gonna tap into this, next gen demographic. People care about when they understand when you invest in a portfolio, people care about what companies they're empowering. Where's your money going? What is it actually doing in the world? What are those companies doing that affect different things in terms of the planet and the people that work for those companies or the products that they make? Are they, ethically run and governed as businesses? People who save their money, who work really hard and save their money, and then need to have a portfolio grow to reach their goals, many of them want to make sure that they're not investing in things that they're morally and ethically opposed to. And so how could you not find out how someone feels about that? And listen, maybe the client doesn't care.
Yeah.
And that's awesome. But the fact that we're not actually asking those questions, I think, again, is a major, major reason of when this 90% doesn't feel heard and understood. That's a major part of the issue, right? That we're investing their money without ever knowing what they're actually comfortable with owning.
Yeah.
So anyway,
I think
that's critical.
Yeah. When we say like, what do they want? And we say they want to feel heard and understood. Really, the reason for that, is because what do they want? It depends. It depends from person to person. And I think historically, advisors have had, this is our investing process. And so once you become a client, we move you through that process because this is our process and this is what we believe and this is our philosophy or our, this is the way we do it as a firm, right? And that's when versus I want to deeply understand you because I am aware that there are everybody's different. Some people are really interested in the details of the portfolio and they want to talk about that and they want to spend time learning about that. Some are not. Some care about impact beyond themselves. Some don't. They really just care about wealth accumulation. So the it depends is the reason. Just like in planning, like the tool that you pull out and use to kind of move the plan along varies based on the needs and the wants and the specific situation for that individual person, which is why you have to know them better. And I think it's just kind of embracing that and understanding that there are variations to this next generation of investors. They do have different opinions. They're not, you can't just paint with broad strokes and be like, they all want to incorporate values, or no one wants to incorporate values, or everyone cares about performance, or no one cares. Like, it's much more gray than that.
And and other inputs of, again, when you think about the mechanical process, meaning what are they interested in? Like what thematic exposures, what trends are they following? Again, investing's meant to be an engaging, interesting thing. For a lot of people, that's an important component of what do I own from a value standpoint, from a thematic standpoint. It's ultimately about, of course, our job is that it's all aligned with long-term financial goals. That's always the core, driving factor. But yeah, all these other things in people's heads about what this whole process is all about. I'm going to hand my hard-earned money to this human person. I do not care about what's in their head about, their special blah, blah, blah approach.
Yeah.
I just I want to know that they're going to understand these different ways of how I think about investing. Again, with the through line of it needs to reach their long-term goals.
Yeah.
That's the heard and understood component.
Yeah. So asking questions about how they think about investing. What do they care about? Do they care about the impact their money is having outside of their own portfolio growth or accumulation? Asking about thematic interests or trends or anything like that they may be interested in. So these are all questions that can lead to engagement in the proposal meeting, but also down the line in ongoing client interactions.
That's right. Every moment, like we were touching on earlier, then becomes curated around that understanding. So instead of, we talk about them as investing stories, right? Firms have their story that they tell about investing a lot of times. Yeah. The story is just the client's story.
Yeah.
The story is you're talking about the portfolio in a way that's going to resonate with what they've told you is important and meaningful to them. That deeply analytical client, first of all, should they be your client? If you actually find out about some of these inputs, there's another tactic we always want to call out. Maybe they don't actually understand what your core value is as a financial advisor. Maybe they've been so unfortunately confused from the industry itself in believing that your job is just to get them better returns. Well, wouldn't that be nice to find out on day one instead of 6 months into the relationship? Now everything's on a spectrum. So maybe that's you're screening someone out of deciding to actually move forward with a client. But listen, some clients that you would want to have as clients are a little bit more analytical and they want to understand some of those technical details about the portfolio. Then you're showing those things to them, but not to the client who's literally saying, please don't.
Yeah.
Who's literally saying, I trust you. I don't want the details. If you use jargon with me, I'm going to cry.
Yeah.
And historically, you're putting up proposals with like 20 pages of portfolio metrics. So all those details, asking the right questions, as you said, then shapes that next moment and the next moment, and then your review meetings and every conversation in between.
Yeah. And just to go back to like where we kind of started with this, and we're talking about as you're getting these inputs, you're immediately adjusting the expectations you're setting. If somebody is indicating they're much more analytical and much more interested in the details, it's your job then to say, okay, this is how I can serve you, if you can serve them. And being really clear with what does that look like if they work with you. And that's when we talk about like sales as a service and setting expectations. You're setting expectations specific to what they are looking for and what they want and what their expectations are. So can you meet them or not? And that way you're not getting into a relationship where either side will be dissatisfied as the relationship progresses. I do want to talk about scale for 1 second. And I know that's not the topic of this, but I know what's probably going through advisors' heads is, okay, great. Now I have to ask all these questions and now I'm going to have all this variation in terms of what is expected
Right.
of me. So maybe we could talk for a second about how doing it this way, how can you do it this way, and deliver a personalized experience based on these inputs and not basically ruin your business with operational drag, basically, to try to support all these different investor types.
Yeah, it is. And that's always the assumption, right? Like deeper, better, more curated experience is then typically like, okay, that means I can never actually scale my business.
Right.
This is going to be that operational drag. So it's a process, I think, of, again, and this is maybe a good sort of way to summarize some actionable steps for people, but to audit, what questions are you asking today, right? What are you actually understanding about this person that lead to nowhere, right? It doesn't change the experience. You're still just going through, got this, I'm doing the same proposal, I'm doing the same investment implementation, I'm doing the same review meeting presentation about what's going on in the portfolio. The irony of assuming that that's scalable is that you then have to deal with the unintended output, meaning the client who says, not directly, but that process was a huge bummer and terrible experience. And I actually want to see this. I want to talk about this. I want to do all these other things. So I think it's a recognition, sort of audit and recognition of your process isn't all that scalable today because it's not curated around each persona. So then from there, it's do the dot connection. If I ask these other questions and understand people in a more nuanced way, and again, this is true as who they are as an investor, but more broadly, you can kind of apply this to the, broader discovery process. But then how do I map that to the next step? So if they fall into this category, they're going to see and hear this. And it doesn't have to be an unending list, right? We can create these categories and do this basic mapping process to say, again, here's where they fall. Therefore, here's my talking points and how I'm communicating about the portfolio. And this is the portfolio I'm implementing. And then this is how I talk about it and engage them moving forward. You're just creating these persona categories and that sort of, Rube Goldberg pathway, decision tree across each of those moments. So it isn't like this qualitative, open-ended, you get all this sort of random data. And then to your point, well, okay, now I got to figure out how with Joe Smith, I'm going to talk about this, proposal. How that dot is connected to the next dot.
Yeah.
So it's just establishing those pathways, I think, is the answer.
Yeah. And I'm sure we'll dive deeper into that in terms of like recommendations and best practices for different personas or different types of clients. But yeah, I think that's a great high level overview. So thank you for that. Anything else we missed on this topic? I mean, this topic is huge. So
yeah, we could go on for 3 hours on this one. So I'm sure we'll continue this dialogue in future episodes. But Kelsey, as always, what are we learning or excited about as of now?
Yeah.
What's on your list?
I mean, on the fly, what I'm excited about right now is just this podcast, honestly, like having a set time every other week or so to just sit down and talk about this stuff, which I get, as you know, very excited about, is great. I'm really pumped.
It is, and as the audience will learn, this is sort of an extension of what you and I do every day in our own business. So it's cathartic. So I'm thrilled to be doing it, and it does sort of. Again, as we talk out loud and explain these things, it definitely brings up new ideas even for us. So
yeah, totally.
I guess that's another sort of tangible takeaway for people. Like, go sit in a room with your team and just have these conversations yourselves, right? Take this away and go think about, in a group setting with your team, auditing the process and having conversations.
Yeah, it's fun. What about you?
My thing I'm excited / confused about, sort of a timely thing going on, the open AI saga. I'm sure a lot of people are following this right now.
Yeah.
So, this board, this construct where this air quotes company is supposed to be a nonprofit. It's all about the benefit of humanity and how AI is going to, you know, improve all of our lives. So it's not meant to be a for-profit organization. And so you have this board construct to try to maintain that intention.
Mm-hmm.
And, you know, I think what we're seeing is not so much,
Yeah.
right? There's really, you know, there's other, I won't name names. Everybody knows the companies at the table trying to get involved and leverage what OpenAI is doing. But I think this sort of learning thing that's interesting as I kind of take it back and think about our own business and businesses in general is if incentives aren't aligned within an organization and there's a lack of clarity of like what that North Star actually is meant to be,
Yeah.
it's just so clearly a recipe for disaster, right? You have people at the table who want one thing out, you know, as an outcome, and then other people arguably essentially the opposite in this example, which is, yeah, it doesn't sort of bode well for the future for that company, but also like for humanity. So it's kind of terrifying.
Yeah.
And the other sort of last point on it is governance is so important.
Yeah.
Right? Like having an actual board construct that has power and ensures that incentives are aligned and that the company's moving in the direction it's intended to go. It's kind of amazing that such weak governance can be on display with like one of the most important entities on planet Earth right now.
Yeah.
So anyway, I think a thing always top of mind in how to run a business is like, are you all swimming in the same direction?
Mm-hmm.
You're trying to accomplish the same thing. And do you have a board construct or a governance construct to actually get it done?
Yeah.
So we'll see how this one plays out. It's
Yeah.
pretty wild.
Yeah, I've been following it. And just for context, because I know this isn't going to air right away, you know, we're like end of November 2023 when we're talking right now.
Yeah.
But yeah, I've been following
Whenever
it
this
as
comes
well.
out, I'm sure.
Yeah, I'm sure.
This is not the end of the story.
Yes.
So we'll probably, it'll come up again in future episodes.
Yes,
I'm sure.
for sure.
So I think with that, we'll call it a day. Thanks for listening, everybody, and we'll see you next time.